Welcome back to NOTG. So today we're going to deep dive into District 7, in particularly on this particular new launch development project called Aurea, which came from the previous Golden Mile development, and of course after it's being en bloc, now the entire new project seems pretty interesting. And of course a lot of you are asking, is this project investable? Is it great for you to own and stay? So we're going to deep dive into some of the potential of this and also what's happening in the downtown core region. Let's go. So CCR is the central core region. So if you look at the map itself, I call this the foreigners' playground. Why do we want to talk about this region? Is because internationally, in all countries, everybody look at the central city core. For example, if you go to KL, Malaysia, you look at CCR Region. And if let's say, for example, if you go to China, you look at Shanghai, right? If you go to Shanghai, you look at where is the central core. If you go to KL, you also want to find out where's the central core. But then, when we look at the expansion of central core, we need to look at this particular slide. So when you look at CCR is a central portion of Singapore. It comprises of District 9, 10, 11, which is Orchard River Valley, Bukit Timah, Newton, Novena, and it also includes District 1, 2, and 7. Now, District 7 is the entire precinct all the way starting from the downtown region where you see like South Beach, Bugis, towards Kampong Bugis, Jalan Sultan area, all the way now stretching towards where Aurea is being located. The latest master plan by our minister that was being launched in the year 2025, if you have not visited URA, you should go and have a look because it's almost, I would say that it's awesome and impressive that the amount of forward planning our government have for Singapore. And I think in Singapore, if you have already invested in Singapore for the last 20 years, you know that a lot of progress are happening, which is also why for a straight, I think like 20 years, we've been named globally as one of the top most livable city in the world. And of course, our real estate prices are not low because real estate prices coincide with also the most livable city. Because if it's not most livable, it wouldn't be popular. And because it's popular, there's a lot of demand, international audiences, people migrating in, high net worth individuals and millionaires coming in. Just have a look at the latest Henley and Partners report. We are now in the number 3 ranking status in terms of the amount of high net worth individuals that's coming in to Singapore on a year-to-year basis. So the amount of wealth and liquidity flowing into our country and the amount of people that's wanting to apply PR as well as our nationalized citizenship is actually going on a very consistent basis. So I would say that in terms of our country's growth is now on our 60th year, very, very, I think, promising in the years to come. But most importantly, CCR also includes District 4, Sentosa Cove. And today we want to deep dive into District 7 to have a look at the potential of this district. Because when we talk about District 1 and 2, that's largely Marina Bay, CBD zoning. But District 7 is a little bit different because it consists of heritage. If you have traveled to a couple of countries, you'll notice that in every country that is very well developed, there's usually the very prime zone. So for example, if you go to Malaysia, KL, you will see KLCC. But then with the development of KL, you will also notice that there seems to be new kind of like luxury districts that's popping out. And that's very similar to a lot of countries as well. So let's have a look at this core relationship first. And then we can deep dive into some of the potential that's upcoming. So CCR comprises of 9, 10, 11. And then you have another CCR, which is here, District 1, 2, 7. So traditional CCR, I will call them the 9, 10, 11 zone. I call them the old money luxury zone. And the new version of CCR, why is it important that our government must so-called like develop a new CCR is because of that hybrid mix, younger generation, Gen Z, there's the ultra modern kind of concept, CBD financial hub concept plus heritage kind of zoning. So I will call this the ultra modern CBD centric luxury living, which is in District 1, 2, 7. And if you go to Shanghai, you will see the old money luxury zone. You also see the ultra modern luxury zone. If you go to different countries, for example, in Tokyo, Taipei, Hong Kong, Sydney, New York, Shanghai, this is also very prominent. They have this traditional CCR as well as downtown CCR. So we are talking about District 7 as being enjoying one of the best of both world effect, because CCR is being known as a central zone in Singapore whereby For example, if you own a property investment, if you want to own a property that is easily rentable, you want very high rental speed, then most of the time, a lot of international audiences, expats, tenants, when they come in, they will first ask, where is the CCR zoning? What kind of CCR zoning are there? Am I talking about the traditional luxury old money zone, or can I enjoy a bit of like heritage? Can I enjoy a bit of fast-paced movement, shopping near to the financial hub? And I think this is where District 7 is being located. And right now in this current season, in year 2025, moving towards 2026, it seems that the disparity gap and the equilibrium has like a very strange kind of relationship. Just track back to what these two charts are showing, all right? So basically, let's say if you look at RCR versus CCR, you can find some of the pricing of RCR very, very similar to CCR. And sometimes even in OCR is pretty similar to CCR in terms of overall quantum. Because one of the key things that has happened over the last few years, ever since COVID, is that if you look at RCR versus CCR pricing gap, pre-COVID, RCR was cheaper by CCR by 31%, but post-COVID until today, RCR is technically more expensive by CCR by 3.08%. Just have a look at this graph and the growth of pricing and catch up in terms of PSF levels. So thus, in terms of PSF, I think when we look at some of the new launches as well as some of the properties that's happening in CCR, you'll find that, hey, why is it that CCR PSF is about the same as RCR PSF? And why is it that OCR PSF, because they are doing in the range of 2250 to 2005 PSF, is also like just $100, $200, or $300 difference from a CCR pricing. And when we look at OCR, this is the current price gap. Pre-COVID, 71% price differential in terms of PSF. Post-COVID, just a short 5 years later, OCR versus CCR is only 7%. So when I was putting in some of the data point between some developments over here, and just trying to look at what has been the past transacted in terms of new launch comparables. Some of the balance units in some launches in the RCR zone. And of course, whenever we look at this kind of price gap, we're not saying that this project is better than that project. No, we're not saying that. We're just saying that when you as an investor, or let's say you're somebody that's buying your next property to stay or invest, if you can find the disparity gap movement when it's out of equilibrium, you can have a potential advantage to enter into a project to take advantage of this opportunity, because this opportunity doesn't happen all the time. Let's come back to this screen for a little while. This is what I call the disparity gap. Just an example. Let's say if you're comparing between Aurea, which is a CCR project, and let's say this two-bedder that you're hunting for, and at the base entry level, for example, so the level 4, 5, 6 units, they are starting from 2007 plus PSF. Quantum-wise, maybe about $1.8 million. Just an example, all right? 2007 plus PSF, Aurea. And you happen to be looking at a balanced launch in an RCR project, for example, at Grand Dunman. And that is at 667 square feet. There's a unit available now at this point of filming. And that is at $2 million. PSF at 3,000, 2-bed, 1 bath. And this is 2-bed, 2 bath. All right. So versus a RCR 2-bed, 1 bath, $2 million. And this is at $3,000 PSF. Of course, this is high floor, very high floor, right? This is, of course, low floor. And we can't really compare a high versus low floor. But then we should definitely compare the strength of the region, because one is a CCR development, one is a RCR development. And when we compare the strength of a region, we call it region disparity. And this region disparity occurs when I put A and B together, because by right, A and B should have a very healthy equilibrium gap between a CCR pricing and an RCR pricing. But why is it that now if you go for a high floor here, this is 2,000, this is 3,000 PSF. You go for a lower floor, this is 2007 plus PSF. And even if I were to go higher floor here, for this particular project, and if I'm paying $3,000 PSF, it will still be around $2 million for a 2-bed, 2 bath compared to a 2-bed, 1 bath over here. And if you can take advantage of this equilibrium gap between region, then you have an advantage because simply said, 4 years later or 3 years later, when this project hits its TOP status, the person that would have paid 3,000 will want to sell at about 3,003. They want to sell maybe 2.25 million. You, being in the CCR area, even if you have entered at the same price at 3,000 PSF at $2 million, you want to sell 2.25 million, 3,003 PSF, but you have a CCR product versus a RCR competitor. And basically, you can sell and exit at the same price. And let's say, for example, you go for a high floor, you can take advantage of that as well. This is a high floor, this is a high floor, or you enter at about the same price, but you are in a different region, you're in a different district, you're in a different region strength. And that's what I call region disparity effect. So if you look at this example on screen, basically, for example, if I take a two-bedder, even if let's say I were to go high floor for a large unit at Aurea at 710 square feet, this basically 2-bed, 2-bath, 1.99, or just take it as $2 million, 2008 PSF, comparable to some of the balanced units available in the RCR region. I think this is something that you can look at. And of course, if you were to look at some of the balanced units at Chuan Park, and that's of course OCR region. Of course, that Chuan Park location is fantastic as well. Serangoon, Chuan MRT station going into RCR region already, but it's still considered OCR. The balanced unit is now 1.9 plus. Of course, developers have done very well. They're not urgent to sell for that project. But if you're considering like balanced unit, then you should definitely look at in different stronger district or region. Can I get something that is about the same price as a less stronger district, less stronger region? I can take advantage of this gap right now because there's always a season for gap. And these kind of gaps don't exist all the time. And that's the region, and that's the reason why we want to deep dive into this particular district to talk about CCR region strength. There's always what I call a correct equilibrium kind of thing. So in the past, a healthy region disparity is that, for example, I have X amount of dollars. If let's say this X amount of dollars only allow me to buy a 1-bedder in CCR, then I can buy a 2-bedder in RCR, and I can buy like a 3-bedder in OCR. If I can buy a 2-bedder in CCR, theoretically, I can only buy a 2+ study or 3-bedder in RCR region and a 4-bedder in the OCR region. However, what is happening now is that sometimes we see this kind of occurrence whereby OCR, RCR, and CCR 1-bedder are around the same quantum price. And when that occurs, this is not a healthy region disparity. And the reason is because of the two charts I showed you is that pre-COVID, post-COVID now, in the last 5 years, the pricing caught up by RCR and OCR has went up so much that now I think there's a lot of opportunity in the CCR zone because pricing for a lot of the launches now, and especially when you look at D7 Aurea, it starts from about $2,007 PSF all the way, of course, to $3,000 for some of the very high floor units. And you can get it something at a PSF range that's quite comparable to OCR, RCR launches. And at the same time, the quantum entry range is also pretty palatable. So now, of course, it seems that a 2-bedder in RCR is the same as a 2-bedder in CCR, and sometimes it might be even the same as a 2+ study in the OCR region. So when we spot this kind of stuff, we want to see if there is any opportunity in terms of entry that we go in, and we call this the region disparity. Now, let's talk a little bit about this particular development itself, because in terms of transformation-wise, I think there's quite a fair bit of upcoming transformation, including, of course, the conservation areas and buildings, the identity corridors. You also have the entire urban design areas. You also have the Kampong Bugis evolution, as well as the Kallang Alive project. So these are some master plans that we should not overlook, because whenever our government says that they are putting efforts, and if you go to URA, the physical gallery to have a look at what's happening, the entire plan is already mapped out. And of course, sometimes it might take 5 years, 8 years, 10 years to develop. Certain master plan will come up faster. Certain master plan will take a little bit long time, basically for government to do study. But I think as long as they already has announced, I think our government is committed to make it happen. And also, when you look at some of the very interesting rejuvenation point, there's a lot of makeover that's happening in the entire Beach Road Bugis region in terms of rejuvenation. Of course, that includes like the Shaw Tower. It includes the entire Nico Marina East, Southern Coastline, new homes that are being planned, the National Day Rally that has been talking about the Kallang Alive project. You have Marina South the new mixed-use urban neighborhood. You also have the new investment to expand the integrated resort and Marina Bay Sands, development of the float at Marina Bay. All this, the future NS Square, Kampong Bugis, Kallang rejuvenation, new sports facilities for Alive, precinct, Kampong Bugis, and the plan to go car light residential. So the identity corridors includes the very exciting zone where we're talking about, which is the Golden Mile region. All right. So the Masterplan 2025, I think, is very interesting. And wherever you see all these yellow plots here, of course, maybe you'll be saying that, hey, in future, will the plot in front of Aurea, because there is a yellow plot in front of Aurea. We don't know what's that going to be. It's a reserve site. It could be a high rise, it could be a mid rise, it could be a low rise. It depends on the plan of the government thinking about the waterline region over here. But in any case, there's going to be tons and tons of new developments in the next 20 to 40 years as our population keeps gradually growing. So no matter what project you buy in today's market, unless you're really sitting at the brim of the seafront facing, there's no perpetual view. But the important thing is that any new projects that come up right across your street, right in future, is going to be a new PSF level that will potentially help your PSF entry price today. Just an example, just look at East Coast. Everybody thought that the moment I buy a seafront facing East Coast condo development, I have perpetual unblocked view. But then last year, the announcement of Long Island technically will mean that potentially a lot of all these condos sea view is going to be blocked. So there's no perpetuity because plans and trends and requirements of the country changes along the years. What's important is that we don't wait for 20 years later to invest in development. We invest in something that makes sense today in terms of entry quantum as well as PSF level. Let's talk a little bit about some of the catalysts that potentially has not been fully priced in yet. That's relating to the precinct. Of course, Golden Mile Complex is $700 million acquisition by Far East as well as Perano. This is like a conservation-led mixed-use development with a new tower Aurea. And of course, the whole development is centered around like a signature heritage, modern kind of vibe, as well as a luxury component that is all weaved into one. There's some projects that will be completed very soon. I mean, let's have a look at just down the street. Shaw Tower is a 200 meters away, Grade A building. It's slated to complete mid-2026. There's already like pre-committed premium operators. For example, the Great Room, they are taking a 36,000 square feet hub within that project itself. Of course, that's going to really enhance the corporate kind of like tenancy depth and the day population and day traffic around the entire Bugis, Kampong Bugis region. Now, Guaco Midtown, the whole ecosystem phase has already created like a network hub. There's almost like more than 10,000 daily executives, residents, and visitors as expected in the district. This is like one of the key drivers for the region for rents, amenities, office use. Of course, the planning backdrop as well for the URA central area, Beach Road, street block plans, as well as CBD fringe intensification. This is going to bring a lot of developers' attention to take advantage of URA's focus on CBD's sort of like rejuvenation process. So let's further break down in terms of what will happen in terms of transformation. I think the important thing is to pair transformation together with the existing kind of competition around the area. Because as an investor, I want to look at a few key things. So today, for example, let's say I want to invest in a property and I want to go in at about $2.5 million. All right. And I have to put in 750K. Why 750K? Because 25% down payment plus buyer's stamp duty, plus minus 750K. This is my capital. This is the total property price because I'm going to leverage 75% on my loan as well. And I want to know, is my capital going to have a potential to be preserved? That means I do not want to lose money. That is basically the number one top process of an investor, is that the amount that I put in, I don't want to lose money. What is the possibility of this property making me lose my capital? Because there are, of course, people who lost money, and which is why when you look at certain kind of projects, there's profitable transactions as well as unprofitable transactions. All right. Second thing is that I want to look at my tax efficiency, which is why, for example, if let's say you to have two names in a property, while a lot of families, they decouple their name out of the property. And of course, by doing refinancing, decoupling, they're freeing up their name to buy another property is for tax efficiency so that they don't really have to pay the ABSD unnecessarily. Because, for example, if you pay ABSD as a Singaporean 20%, technically, if you buy any property at $2.5 million, 20% is not a small sum. That's 500K of tax. All right. So they always look at tax efficiency. And the third thing they look at, of course, is the growth. Is there a potential for growth of my wealth? That means if I were to invest around 50,000, can I grow my wealth? And I want to know, is there price appreciation? So for example, if I were to invest in Aurea, is there a chance? Of course, nothing is guaranteed in this world. Every development comes with opportunity and risk, which is why investors always look at these 4 quadrants, because they want to know, is there a potential for price appreciation to grow my initial capital? We call it cash on cash return or return on capital. So this 750K, when I enter and when I exit, is there a chance for this 750K to grow into a bigger sum after paying off all the legal fees, agency fees, and all sorts of so-called like cost of holding on the property, including interest costs and so on and so forth. And this is, of course, my cash flow. So importantly, when you want to invest in a property, especially if it's a new project, cash flow is usually related to the progressive payment, which usually is a very, I would say, like attractive point for a lot of investors, because this is progressive payment. And cash flow also relates to the holding costs of the property. So some people, they want to buy a resale property because they want immediate rental cash flow. However, also to note that immediate rental cash flow doesn't mean that it can fully cover the mortgage. So you need to calculate whether your rental for resale property can cover the mortgage, or you still have to top up MCSD fees and part of the mortgage, etc., etc. And of course, your MCSD fee kickstart for resale properties at the start point of you owning the property, and your installment also kickstart immediately. For progressive payment, they follow a tiering system based on the construction of the project, and this is sometimes very favorable to investors that want a more hassle-free kind of concept, that they don't want to manage a tenant, they don't want to have the MCSD fee kickstarted, they want to have a brand new development, they want something that they can really manage their cash flow just by using the progressive payment format to own a new development. And of course, last but not least is the growth. Is there a chance based on my entry price towards my exit when it hits TOP maybe 4 years later? And should I decide to sell on this day when I collect my keys, 6 to 12 months after I collect my keys, if let's say I want to sell or I want to rent out, what is my rental speed as well as my possible exit price? Now, to know the possible exit price, we usually want to come in and go back to the original point of entry first, because as an investor point of view, your entry price is actually the most important. And to determine the entry price, we usually look at what other competitors are there in the resale market, as well as the other new launches, because we want to know from an entry perspective, this price that I'm entering, for example, let's say if I'm considering Aurea because I want a heritage factor, I want the fact that it's so interesting. I mean, like the original concept, if you look at this new futuristic mock-up, they have to preserve the original concept in a sense. There's some modification. But when I was looking at it, I think it's very, very interesting in the sense that firstly, you have 22 stories. You have 45 stories for Aurea. Golden Mile is 22 stories. And when you look at this site model, what's going to potentially happen is that firstly, the retail shops are not for sale. All right. And I think that's a very good move, because the retail shops are not for sale. It's going to be managed retail F&B. The moment retail shops are for sale to strata owners, individual owners, what's going to happen is that usually when in TOP, you see a lot of blank shops because there's no centralized management to get in the anchor tenants. Every owner is like, you're free for yourself to get your own tenant. And usually out of anxiousness, you just easily rent out to anybody. And then the whole mall has no concept. And usually the best malls that perform the best are the malls that are being centrally managed by REITs. They have a management team. They have contacts for different anchor tenants, getting the brands like McDonald's, Starbucks and all that, make the mall to have a consistent theme like F&B are all at which level, how do we segregate the clothing, how do we segregate the electronics, how do they segregate different kind of concepts for the brands to be at different levels, and the traffic flow as well. So malls calibration are very, very different. And the moment the developer decides not to sell, I think is a very good thing. So basically retail and F&B are not for sale. Medical suites, very interesting concept. And then of course, all your offices, enterprise office at the top as well, plus a flagship office. So they have a couple of concepts that is, of course, on the commercial side. And the important thing is that when you look at this whole combined concept together, you have 2, 3, 4, 5 betas. Majority of the units, 84 units, are 2 betas. 3 betas are at about 28 units, and then 4 betas, 56 units. 5 bedroom, 80 units, you have 2 penthouses. And of course, I think the entry point for the 2 and 3 beta is something that I think is pretty interesting. The moment you want 4, 5 betas, that's considered the luxury zone. And I think if you want something that's seafront facing, 4, 5 betas are fantastic. There's also a very interesting concept that recently I talked about is regarding the 60% ABSD that has been taxed on foreign buyers. Of course, over the last many years, foreign buyers' contribution to the amount of residential transaction is insignificant, meaning that Singaporeans and PR, they lead almost 90% of all the residential transaction, and that's shown in our strength in our real estate pricing. Now, the important thing is that in future, if there's ever a chance for government to reduce the ABSD, or maybe if let's say they were to really down tier the ABSD from 60 maybe back to 30 or back to 20 for foreigners, I think this is also another form of first mover advantage, because by the time you already own a CCR project, and most foreigners, they love to buy CCR projects. They love to buy projects with a story, with a transformation story, with a heritage story, with a luxury story. If you already own a CCR project, and if foreigners will really come back with liquidity to buy Singapore developments, residential properties, then I think that is considered like a first mover kind of advantage as well. Beyond the Golden Mile, the wider Beach Road corridor has been identified under URA's draft master plan 2025 as an urban corridor. Golden Mile Tower, which is currently undergoing a collective sale process, has been offered redevelopment incentives if its iconic cinema block is conserved, paving the way for a potential mixed-use landmark that will further elevate the district. Now, while Golden Mile Tower eventually undergoes rejuvenation, it could unlock close to 500,000 square feet of gross floor area, bringing fresh residential and commercial supply to that zone. Directly beside Aurea, a site has already been earmarked for future residential use with a plot ratio of 6.9. This could support a development of more than 36 stories. So together, these moves in this zone occupy a very prominent stretch along Beach Road. So for Aurea homeowners and investors, this underscores its positioning as the first luxury residence anchoring Beach Road, securing early entry ahead of further catalysts. Adding to this transformation is the historic St. John Ambulance headquarters nearby, a long-standing civic institution that enriches the cultural texture of the area. And with heritage, civic character, and new high-rise development converging, Aurea benefits from a layered transformational effect. And today's renewal at Golden Mile Tower, Shaw Tower, and Guaco Midtown, as well as tomorrow's wave of intensification. That's what makes District 7 such a unique first mover opportunity. But let's come back, of course, to maybe to have a look at the market overview first. All right. So in terms of market overview, there's this very interesting article that Property Guru has written, is that there's a potential by this writer there that Bugis might overtake. In fact, they didn't even use the word might. They say he will overtake Orchard as Singapore's new prime residential district. I think one of the main thing that they talk about is that District 7 is entering an uncharted territory. And of course, it might unseat District 9 as the country's most prime residential area. So basically, the PSF growth in Bugis has been very, very healthy. It's changing to like a history-rich and, of course, like very hip and vibrant kind of civic district. And, of course, other promising district is like District 3, District 19, but basically it's really talking about District 7 that might really overtake as a new prime residential. So the address, I think, is gaining a lot of popularity. These are, of course, the prestigious mixed-use development already existing in the area. So you have Concourse, Skyline, you have City Gate, you have South Beach, Dual, Guaco, Midtown, Modern, the M. Let's have a look at the map because I think it's very interesting when you look at this. Now, the very first project, if I shift back a little bit to Lavender, is City Lights, all right? And then you have South Bank. And then you have, of course, like the Concourse, Skyline. You have City Gate, all right? You have then Dual Residences. And then the whole Guaco Midtown Bay came out. The M came out. Guaco Midtown 2 came out. So if you look at this entire belt here, technically speaking, the whole D7, if I were to eliminate all the older small boutique developments, which is not a lot as well, because this is technically like the arts zone. That's also where like SMU is being located. You have SOTA, you have LaSalle, you have like, of course, all the shop houses as well. And the existing project, there's not a lot of government land sales for sale because that will really depend on the future reserve site, which is why if you want to find a project here, sometimes it has to go through en bloc, which is what happened to Golden Mile. Now, if you look at Citygate, it was also en bloc from a previous development. So it's not easy to find like a new project, government land plot. And when you want to hunt for projects here, technically speaking, we can go by a handful of like just within your two hands in terms of competition, that in terms of tenants' choices in future. They can only choose from these few projects. Either you want to stay at Dual Residences, you want to stay at the M, you want to stay at Citygate, you want to stay at Concourse Skyline, you want to stay at Aurea, or you want to shift towards Lavender Zone for City Lights and South Beach. All right, but I would say the Lavender Zone is a very different vibe compared to the vibe here near to Nico Highway as well as Bugis. Because Nico Highway to Bugis, this is basically a different MRT line, and most importantly, you have the entire belt of Kampong Bugis as well, very near to where Aurea is being located. So I would say the vibe is very different because you can also oversee towards Kallang Basin. And thus, I think in terms of competition level, is not a lot of competition for the existing projects. Some buyers, they were asking about the HDBs that is opposite, basically the Beach Road Garden. Some of the HDBs over here, very famous Army Market over here as well. My son is in Army now. He always need to go there and buy some stuff. And of course, some of the units that are back facing from Aurea, lower floors unit are looking towards the HDB zone. Now, of course, what's going to happen in future? These HDBs are now very old already. There's a concentrated area over here. Right across there's also HDB Crawford Court. Now, these are what we call the heritage HDB. If you look downwards towards Bras Basah as well, they also have like a cluster of HDB over at this zone here called Waterloo. Bras Basah Complex on top is HDB flats as well. And I think these are really like heritage kind of HDB, which in future, my opinion and personal take is that because these are like very rare plots, and of course there's like a new HDB Crawford Heights that's under construction here, there will definitely be rejuvenation. It could be a new township of HDB, which will definitely be under the prime housing scheme. And these are, of course, going to be $1 million HDB flats. It could be redeveloped into something else when the lease run out. It could be redeveloped into maybe, example, private properties as well. We are unsure. But of course, I think in future, whatever plot that is upcoming over here, whatever kind of plans that government might have, this is going to be a very prime kind of housing plot because it sits between the walking distance of Golden Mile, of Aurea, towards South Bank, towards Lavender. And this is a very rare plot that also faces towards maybe the Kallang Riverside region. So there's a lot of sea view, river view over here. So I think it's a very precious plot for the government. And I think they might have already plans for that. All right. So I think most importantly is to look at the entry price as well. Because as mentioned, I think entry price vis-a-vis view. Yes, views are important. The best views here belongs to the 4 and 5 beta because they have a good view of the city and Marina Bay. Breathtaking view, and of course it is being reserved for the large format unit, but as an investment point of view for let's say 2 and 3 beta, I think as long as the entry price makes sense, then in terms of rentability, in terms of exit, it should be pretty safe as long as your entry price and PSF range makes sense from a regional disparity advantage point of view. If you were to come and have a look at some of the comparable pricing after we look at all these launches over here. Aurea is also like part of the mixed-use comparatives. So mixed-use development, exclusive 188 projects. Technically speaking, if we look at comparison with the rest, to get a mixed use within the CCR zone downtown core region is also pretty rare. And this is what I meant. Basically, District 7 is parked right side by side with District 9. So them sort of enjoying the same status as CCR region. I think Aurea is parked in a very good kind of like a strategic location. So let's have a look at some of the comparables in terms of resale versus Aurea as well. So we already talked about the price trends of OCR, RCR, CCR. We're not deep dives into that. We want to look at really in terms of comparing with other new launches. So of course, like D3 RCR, Promenade Peak now has been trading at a range of about 2,006 plus all the way to 3,005. River Green is about basically from 2009 to about 3,006. You also have Upper House. Of course, that is like prime Orchard Boulevard location. The highest achieved is about 3,008. One Marina Gardens 3,003. Aurea, Toa Payoh, 3,000 PSF already in RCR region. Chuan Park, highest is 2,007. And of course, Union Square, 3,007 as the highest PSF. Canning Hill Pierce, of course, the average range is about 2,009 to 3,000 plus, but the highest PSF 5,000 plus. One Sophia, highest is also 2,009. Midtown, CCR averagely about, you can see some pricing at about 3,000 plus PSF. Midtown Bay, also 3,000 plus. The M is about 3,000 plus. And of course, when we look at the comparison of resale, Citygate 2 beta now is about $1.6 million. 710 square feet, 2253 PSF. If I put them through our PLB lease reset calculator, I reset it back to 99 years. Technically, it's at about $1.8 million at about $2,500 PSF. All right. So at a resale market for something with a balance sheet of 88 years, is still doing very well at about $1.6 million. And this is basically Citygate. And if you look at dual residences, they are built for larger sizes. The 4 betas are at about 4.78 mil, 2004 PSF, 1,009 square feet. If I reset them back to the full 99, it's about $5.5 million at 2.8 PSF. And Concourse Skyline, 4 betas is at 5.567 asking price. PSF is about 2,005. South Beach, 3.7 million for 2 beta, large luxury, 3,000 PSF. So prices over here are holding strong. And when you look at Aurea, basically, if let's say you can get, let's say like a low floor at 2007, compared to all the prices that we mentioned just on the resale market is holding strong in terms of pricing. But now there's a brand new product in the market. If you can enter at about 1.7, 1.8 million for a 2 beta, 2007, 2008 PSF, or even if you get a larger version of a 2 beta at 1.9, 2008 PSF, I think entry, based on what we shared just now on the screen over here, is that the important thing is to look at the entry. Is this like a safe entry price comparing to the resale comparables as well as the new launch comparables? So based on this, it seems that the entry is pretty palatable. If you were to compare the 3-bedroom as well, the entry for a 3-bedroom at low floor Aurea for the 1,001 square feet one is at about 2.6 plus 2.7 PSF, about 2006, 2007 PSF. So some of the projects that has been done, let's say Parktown, level 2 is already at $2.618 million. So there's always opportunities when you compare OCR versus CCR, RCR versus CCR. And this is what we call sometimes as a potential first mover advantage into taking part of this region disparity that happened when certain regions outside of CCR, they moved too fast over the last few years. And this is the time that CCR can play catch up already, because people will be starting to see, why is the CCR entry PSF and quantum PSF the same as some of the projects outside of CCR? And maybe this is a time to really look at CCR. And this will then propel in the next 4 years, because in the next 4 years, what's going to happen when we look back at the screen is that somebody that bought CCR, somebody that bought RCR, somebody that bought OCR, If they enter at 2005 PSF, this person entered at about 2007 PSF, and let's say this person also entered at 2007 PSF. From a PSF perspective and a time horizon perspective, in the year 2029, naturally as a human being, we all do not want to lose money. Because remember, just now I shared about the first quadrant that investor is looking at is capital preservation. And I don't want to lose money. I want to try and test the market to see I can make money or not. And that's relating capital preservation to growth. I can have the cash flow to hold my property. If I cannot attain this price, I can rent out. Doesn't matter. I can move in. All right. I want to see if I can test the market to see if the market can absorb a price that I want to sell. For example, if I buy an OCR at 2005 PSF, I want to sell at 2008 PSF and I see if the market bites or not. All right. If I buy an RCR project at 2007, I want to see if I can sell at 3000 PSF. If I buy an OCR project if I buy a CCR project, for example, at Aurea at 2007 plus PSF, I also want to see if I can sell at 3000 PSF. And take note, in the year 2029, all these three projects will be completed. They are called TOP projects. And if let's say I want to put my property in the market, I put it at 3000. Somebody in the RCR put as 3000. Somebody in the OCR market put at 2008. I think by then, the resale buyers in the market, they will also look back at the same thing, is that, hey, if I can get CCR at 3000, then I will strongly consider if this location is the right fit for me, provided, of course, after I look at my preferences, not rental, school needs and stuff, so on and so forth. But if it's an investment point of view, then this will also be very highly visible. So I will call this a very highly visible opportunity, because I know that in 4 years' time, I can still fight the market in terms of being very attractive of my exit PSF, because I enter at a PSF that allow me to take advantage of this region disparity. And this is what we call like the first mover entry advantage as well into the CCR zone, because I think 2025 to 2026, there's a lot of opportunities in the CCR region. All right. Some interesting portion as well is that I think Far East has also designed the fact that for 2 and 3 beders, there's no balcony. Now, this kind of layout, I think it makes it very practical in the sense that you give more bang for your buck, and you're going to have more maximized usable space. The balconies are being reserved for the 5 and 4 beders because these are large format units. But if you look at the floor plan of 2 and 3 beders, there's no balcony. Very practical layout that really optimizes your efficiency, whether is it the bigger version of 2-bedder with the bedroom walkway layout or the dumbbell layout. But when we look at 3-bedder, I'm pretty fascinated with 3-bedder as well, because it has very little kind of walkway space that gives more space into the living and the dining area. So I think layout-wise, it's also pretty optimized. Last but not least, I think mixed use and integrated developments are very different from normal residential projects. This is a mixed use development. They tend to confirm based on multiple studies that mixed use developments, they can often command maybe about 15 to 20 or even 25%, thanks to the proximity of MRT plus the fact that there's retail office linkages, medical suites, as well as I think a lot of industrial analysts, they tend to track that mixed-use developments and integrated projects, they tend to do better in terms of premium-wise, because firstly, I think rental speed is great. There's more audiences. There's more kind of like amenities note, and the fact that it's like a project and ecosystem all in one, it tend to attract a better kind of exit as well when it comes to exiting the property. So I think for mixed use, you can also take a bit more kind of like highlight into certain kind of projects like Aurea. If you want to find a little bit more, you can click on the link right down below. I'll be very happy to chat with you to understand a little bit more about CCR market as well as your property journey and portfolio. And this is an episode at NOTG that today we deep dive into D7, especially on this project called Aurea. We'll see you on the next episode. Take care. Rolling. Which is the main cam? Is it too close to me? Ready? 1, 2. Along the portion. Wait, one more time. Restart. Restart.